Have you ever found yourself watching those crypto charts, just captivated, maybe a little bewildered, wondering if a big move is just around the corner?
Oh, absolutely. Or trying to cut through all the noise,
Yeah,
right? The predictions are everywhere.
exactly. Trying to figure out what's really driving things. Well, today we're doing a deep dive into exactly that, the pretty intricate world of cryptocurrency price predictions and market sentiment. Our mission is to take a stack of recent market analyses. Specifically, we're looking at a report called Cryptocurrency Price Predictions, Market Analysis and Outlook, and really pull out the key nuggets of knowledge. We want to arm you with a clearer, more insightful understanding of what's genuinely driving these, well, dynamic digital assets. Bitcoin, Ethereum, a whole lineup of altcoins.
Think of it as maybe a shortcut through the jargon.
Yeah, exactly. Your shortcut to being well-informed without drowning in all those charts. Now, the report kicks off with something interesting. Bitcoin's tight consolidation and Ether's shallow pullback suggest a directional move could be around the corner. So for us, the observers, the curious, what does that actually mean? What's the real pulse of the market right now?
What's really insightful here is that we're seeing this period of profound indecision across the crypto landscape.
Yeah.
It's almost palpable. It really is a high-stakes tug of war. You've got buyers and sellers, and neither side has managed to really seize control for, a sustained period.
Okay.
So we're going to dissect the technical signals, the market sentiment that sort of underpins this tension.
Right.
We'll look at what analysts are seeing for, I think, 10 different cryptocurrencies.
10, wow.
Yeah, and it's less about predicting the future, more about understanding the nuances in the data, those subtle shifts that also happen before the big headlines.
Right, reading the tea leaves, so to speak. Okay, let's unpack this overall sentiment first. Starting with those terms you mentioned. Tight consolidation for Bitcoin and shallow pullback for Ether. They sound a bit technical, but what are they really telling us about the market's current state?
Right. So if we connect this to the bigger picture, tight consolidation isn't really market boredom. It's more like the market holding its breath.
Holding its breath, okay.
Yeah, think of a coiled spring,
Yeah.
gathering immense potential energy as its price range narrows down. It signifies that neither the bulls nor the bears are strongly dominating. Instead, they're both kind of building positions, setting the stage for an eventual, often pretty explosive price move.
But the direction is the mystery.
Exactly. The direction remains unclear until that spring finally unwinds. Now, a shallow pullback, on the other hand, tells a different story. It speaks to underlying strength.
How so?
Well, when prices dip just slightly, but buyers quickly step in and absorb that selling pressure, it indicates that investors see those dips as prime buying opportunities.
Not a reason to panic sell.
Precisely. Not signals for deeper corrections.
Yeah.
It's like testing a foundation. Maybe it bends a little, but it doesn't break. So this combination, this coiled spring in Bitcoin and this resilient demand in Ether, it tells us that while the market might seem quiet on the surface, there's significant tension and potential energy building up. And that often leads to a really decisive trend shift. It can catch short-term traders off guard, actually.
Because they mistake the quiet for weakness.
Exactly. They think nothing's happening, then boom.
Interesting. Okay, the report then references Bitfinex analysts. They observe receding speculative appetite and expect a period of consolidation. Receding speculative appetite. It sounds like investors are getting a bit cautious, maybe. What does that imply for the typical trader?
Yeah, that's a good way to put it. And it raises an important question. What actually causes speculative appetite to recede? It points to a decrease in the willingness of market participants to take on those really high-risk, high-reward positions we often see in crypto.
The sort of moonshot bets.
Kind of. When appetite is high, you get that frantic buying on small news, often fueled by FOMO, fear of missing out. When it recedes, it implies traders are becoming more cautious. They're holding back from aggressive bets, waiting for clearer signals before committing significant capital.
Well, less impulsive trading.
Exactly. This shift can lead to lower trading volumes, more sideways movement. The implication is pretty profound, actually. We're moving from a phase driven by maybe emotional trading to one where participants are relying more on fundamental analysis, macro factors. It might be a sign of maturity, maybe, but also of a market collectively holding its breath, waiting for that definitive catalyst.
But those same analysts, they also point to potential catalysts. They suggest new macro triggers or increased inflows into crypto exchange-traded funds could decide the direction. Can you elaborate on what these macro triggers might be, and why are ETF inflows suddenly such a big deal?
Sure. Macro triggers are those big picture economic and financial events, the stuff that ripples across all asset classes, including crypto.
Like interest rates.
Exactly. Think global inflation reports, shifts in interest rates by central banks like the Fed, or major regulatory announcements about digital assets in key economies. For instance, if interest rates rise significantly, safer, yield-bearing investments become more attractive. That could potentially draw capital away from riskier assets like crypto.
Makes sense.
And regulatory clarity, or the lack of it, can also dramatically impact investor confidence. We've seen that play out many times.
And the ETFs.
Ah, yes. The significance of ETF inflows really cannot be overstated right now. When large financial institutions or more traditional investors seek exposure to crypto, they often prefer regulated products like Bitcoin ETFs. It's easier for them than directly buying and holding the assets.
So it opens the door for bigger money.
Precisely. Substantial, sustained inflows into these ETFs signify growing institutional adoption. This isn't just retail money. This is often large-scale sustained capital. It can inject immense new demand into the market, providing a powerful push that could easily break through these periods of consolidation. It's a really clear signal of crypto's increasing integration into mainstream finance.
Okay, let's zoom in on Bitcoin then. The bellwether, as everyone calls it. The report notes it's been stuck between, what, roughly $112,000 and $115,720. That sounds less like a trend and more like, well, a standoff, like you said. What's really going on under the surface?
Indeed, yeah. That tight range really highlights the deep indecision between the bulls and bears for BTC. It's like two titans just pausing, gathering strength, waiting for the other to flinch, basically.
Mm-hmm.
And what's fascinating here is how the price has repeatedly bounced off the 50-day simple moving average, the SMA. That's around $112,600.
Okay, the 50-day SMA. Why is that specific one so important?
Well, the 50-day SMA is a very commonly watched technical indicator. It represents the average price over the last 50 trading days. And when the price consistently finds support there, it shows that bulls are vigorously defending that key level. It signals a determined group of buyers who clearly see strong value at or above that price. It reinforces its importance as critical support.
Like a floor the buyers won't let it fall through easily.
Exactly, a temporary floor at least.
Now, the report also points to the 20-day SMA, currently around $116,800 as a key selling point. And it describes a squeeze between the moving averages. Can you break down what that technical setup typically means? Why is this squeeze important?
Yeah, a squeeze between moving averages is a really powerful signal. It signals compressing volatility. Think of it like squeezing a balloon. The pressure builds up.
Okay.
It's often a precursor to a very large, decisive move. Imagine the 20-day SMA and the 50-day SMA drawing closer and closer together, literally squeezing the price action between them. This compression signifies that the market's energy is being tightly coiled, building up for an eventual release.
So something's got to give.
Something's got to give. Now, if Bitcoin struggles to break above that downward-sloping 20-day SMA, which reflects shorter-term trends, that confirms persistent bearish pressure. The bulls, conversely, desperately need to drive and maintain the price above that 20-day SMA to gain any real advantage.
So it's a battle line.
It is. Until one side wins, this squeeze indicates a period of heightened tension and anticipation. A sharp, rapid move, either up or down, is likely imminent once this compression finally resolves. It's a key indicator that this sideways stuff probably won't last much longer.
Okay, so let's play out the optimistic scenario. What happens if buyers do finally win this battle and push Bitcoin decisively above that 20-day SMA? What are the next targets?
Right. If they succeed in pushing and holding the price above the 20-day SMA, that would signal a clear shift in that short-term momentum. The next major challenge for Bitcoin would then be breaking the overhead resistance at the psychological level of $120,000.
Ah, the big round number.
Exactly.
Yeah.
Round numbers like that often attract significant profit-taking and new selling interest.
Okay.
But if that's overcome, the ultimate target mentioned is the all-time high of $123,218.
Okay.
Breaking these levels with conviction wouldn't just signal a strong continuation of the rally, it would potentially invalidate this whole period of indecision we're seeing. It could transform consolidation into a powerful new uptrend. It would show buyers have definitively overwhelmed the sellers, absorbing all of the supply at these higher prices and pushing Bitcoin into, well, price discovery territory. That's the dream for the bulls right now.
Conversely, then, what if the bears take control? The report issues a pretty clear warning. A break below that 50-day SMA could lead to falls to $105,000, even $100,000. Is there any, interim support,
Yeah.
or is it a steep drop if that floor breaks?
Well, the report does note some interim support around $110,500, but it's quite clear stating that this level is likely to be broken.
Ouch. Okay.
So a decisive break below the 50-day SMA, which has been acting as such strong support, remember, that would signal a significant shift in momentum. It would confirm sellers are firmly in control.
Opening the floodgates, potentially.
Potentially, yes, opening the door for substantial downside. If that key support gives way, it implies the prior buying strength has just evaporated, and the path of least resistance is downwards. That $110,500 support would then likely be just a brief pause, if anything, before a deeper decline, falling to $105,000, and then potentially that big psychological level of $100,000 would represent a really considerable correction. It would erase recent gains and could trigger further panic selling among short-term holders.
Right.
It implies the bullish defense has failed, and the market is seriously reevaluating Bitcoin's immediate value. That could lead to a cascade effect.
Despite all this near-term technical skepticism, maybe, we still have figures like Tom Lee from Fundstrat remaining incredibly bullish. He's predicting BTC could surge to $200,000, maybe even $250,000 by year-end. How does that kind of long-term, high-conviction forecast from a respected analyst play into the market psychology, especially during these tight consolidation periods?
That's a great question because it really forces us to consider how that long-term conviction can influence market behavior, even when the short-term charts look, well, indecisive. While technical analysis focuses on the immediate price action, these strong fundamental outlooks, especially from figures like Tom Lee, can subtly provide a kind of floor for prices.
How does that work?
During consolidation, when short-term traders are maybe hesitant, these high-profile bullish forecasts can encourage accumulation among the long-term holders, the Ocho dealers.
Right, buy the dip mentality.
Exactly. They might view current dips or sideways movements as golden opportunities to buy more at what they perceive to be discounted prices, based on their belief that much higher valuations are basically inevitable. This fundamental bullishness can quietly counteract that short-term bearish pressure by simply reducing the available supply of Bitcoin for sale. These long-term investors are far less likely to sell into minor corrections.
Interesting. So it's a sort of invisible support.
You could say that. It's a fascinating battle between the immediate signals on the chart and that underlying belief in future value.
Okay, let's move on to Ether, Bitcoin's closest rival. The report notes that buyers managed to push it above its 20-day SMA, which is good for them, but then they couldn't clear the $3,745 resistance level. However, the report calls it a minor positive, that the bulls haven't ceded much ground. What's really significant about that defensive stance? Why is it a positive if they failed at resistance?
Well, what's fascinating there is the sheer resilience it demonstrates. Normally, when a price hits significant resistance and fails to break through immediately,
you expect it to drop back.
Yeah, you'd expect a more noticeable retracement or pullback. The fact that Ether's price hasn't significantly pulled back after being rejected at $3,745 means buyers are not giving up. They're not panicking. They're not aggressively taking profits. Instead, they're maintaining their bids, keeping the price really close to that resistance level.
So hanging tough right below the ceiling.
Exactly. And this kind of tight consolidation below resistance is often a very strong bullish precursor. It indicates persistent buying pressure and conviction among Ether holders. It suggests they are simply regrouping, maybe building momentum for another attempt to push through that key resistance rather than abandoning their efforts.
Okay, so if that bullish pressure does finally pay off and ETH manages to cross that $3,745 hurdle, what are the next key price targets we should be watching?
The report clearly points to $3,941 as the immediate next target, and then potentially $4,094 after that.
Okay.
Breaking $3,745 with conviction would signal a clear continuation of the rally, renewed upward momentum for the ETH steep hair. These targets are likely identified through, a combination of previous resistance levels and maybe Fibonacci extensions.
Right.
When a significant resistance level is breached, it often clears the path for pretty rapid upward movement. Previous sellers might flip and become buyers, new buyers enter, aiming for the next logical price barriers. If buying pressure is strong enough to overcome even those next levels, it would confirm a powerful bullish continuation for Ether.
Now, every good prediction, bullish or bearish, needs an invalidation point, right? A point where you say, okay, this idea is wrong. For Ether, the report cites a plunge below the 61.8% Fibonacci retracement level of $3,300. Could you quickly explain what a Fibonacci retracement level signifies? And why is this particular level, 61.8% at $3,300, so critical for Ether right now?
Sure. Fibonacci retracement levels are really fascinating tools. They act as potential areas of support or resistance that a lot of traders watch very closely. They're based on the Fibonacci sequence,
Yeah.
that mathematical series seen all over nature. Each number is the sum of the two before it.
Right. 1, 1, 2, 3, 5, 8.
Exactly. Think of it like a spring that, after being stretched, tends to pull back to certain predictable points. It seems to reflect a kind of natural equilibrium in price action. Now, the 61.8% level is often considered one of the most significant retracement levels. A break below this $3,300 level for Ether would suggest a much deeper correction is underway. It could potentially open the doors for a fall all the way to the 50-day SMA, which is down at $3,058.
Okay, so a significant drop.
Yeah. If that 61.8% retracement fails to hold as support, it strongly indicates that the preceding upward move might be losing its steam entirely. It suggests a more substantial downtrend, not just a healthy correction within an overall uptrend. It's really the point where bullish hopes for Ether, at least in the short term, begin to seriously dim.
Okay, we've covered the big two, Bitcoin and Ether. Now let's look at some of the other prominent altcoins. Many seem caught in their own versions of this tug of war. Let's start with XRP. The report notes it's bouncing off its 50-day SMA but then facing selling near its 20-day SMA. That sounds like a classic buy on dips, sell on rally scenario, just keeping it stuck in a range. What are the implications for traders trying to navigate XRP?
Yeah, this pattern in XRP really vividly illustrates a clear lack of directional conviction. It's very similar to Bitcoin's current indecision, actually, but perhaps within an even tighter, more confined space. For the XRP-USDT pair, it means increased volatility, but strictly within that defined range.
So choppy.
Very choppy. Traders are likely scalping profits, buying near the lower bound, that 50-day SMA, acting as a reliable floor, and then selling near the upper bound, typically the 20-day SMA, which is acting as a clear ceiling. This constant back and forth prevents any sustained breakout in either direction.
So frustrating if you're looking for a big move.
Definitely. The implication for traders is that this is a highly technical market right now,
Yeah.
favoring those who are really adept at identifying these short-term support and resistance levels for quick trades. It's less about long-term trend following and more about capitalizing on these brief fluctuations.
Okay, so when will this corrective phase, this range-bound action, be truly over for XRP? What specific levels do buyers need to conquer to signal an upside move? And what's the downside risk if they fail?
Right. Buyers need to decisively drive the price above that 20-day SMA, which is currently around $3.16. That would be the first signal of a potential end to this corrective phase. It would indicate that short-term buying pressure is finally overcoming that consistent selling we see on rallies.
Or if they manage that?
If they achieve that, the report points to potential targets at $3.33 and then possibly $3.66. These are likely the next psychological and technical resistance levels where sellers might regroup.
And the downside?
Conversely, a drop below the 50-day SMA, around $2.69, would signal the bulls are losing their grip. It confirms their defense of that key support has failed. Should that happen, XRP could potentially tumble down to $2.40, which would be a significant downturn.
So it really raises the question.
Exactly. Which side will eventually exhaust the other? Will the consistent dip buying finally overwhelm the rally selling, or will it be the other way around? The longer it stays in this tight range, the more coiled that spring becomes for the eventual decisive move.
Now let's pivot to BNB. Its relief rally is also facing selling at the 20-day SMA. Similar story. But the report notes a positive sign here. Bulls have kept up the pressure. What's the significance of that persistent pressure, even though they're hitting resistance? What does it tell us about demand for BNB?
Yeah, that persistence suggests pretty robust underlying demand for BNB. Normally, when a relief rally hits resistance and sellers step in, you'd expect the price to retreat significantly, maybe back towards the previous low. But for BNB, the fact that bulls are maintaining that upward pressure, not allowing the price to fall too far back, suggests the buying interest is strong and sustained.
Like they're not giving up easily.
Not at all. It's like an ongoing siege at a fortress wall. The attackers aren't backing down, even if they haven't breached the defenses yet. This continued pressure implies that buyers have conviction, they're accumulating positions, and that is often a precursor to an eventual successful breakout if that pressure is maintained. It speaks to a very robust underlying demand that's preventing a deeper correction.
Okay, so if BNB does break above that 20-day SMA, where are the next targets according to the report? And conversely, what's the critical support level that, if broken, could signal a nosedive?
Right. If the price rises decisively above the 20-day SMA, the BNB USDT pair could initially climb to $794. Now, sellers will certainly try to halt the up move there, but if the bulls prevail, the rally could extend further to $815 and then potentially $861.
Okay, successive levels.
Exactly. These are successive resistance levels that would need to be overcome, demonstrating increasing strength in the bullish trend. However, if sellers successfully defend that 20-day SMA, suggesting their conviction is stronger, that significantly increases the risk of a break below the $732 support level.
And that $732 level is important.
It seems to be. It likely represents a significant historical support zone. If it gives way, the report indicates the pair might then nosedive towards the 50-day SMA and $706. A breach of $732 would signal a pretty significant shift in the balance of power, confirming bearish dominance and potentially accelerating the downward movement as stop-loss orders get triggered below that level.
Next up, Solana. SOL has dropped to its 50-day SMA, and again, relief rallies are being sold into. What's particularly intriguing here is the report's mention of flattish moving averages and the RSI just below the midpoint not giving a clear advantage. What does this ambiguity actually mean for predicting SOL's next move? It sounds like the coin is literally just waiting for a signal.
That ambiguity indicates a profound state of equilibrium, really. Neither buyers nor sellers have a decisive edge right now. The flattish moving averages suggest a distinct lack of a strong trend. They're not pointing clearly up or down.
Just sideways.
Pretty much. And the relative strength index, the RSI, being near the midpoint, usually 50 is the midpoint, indicating neither overbought nor oversold conditions that confirms this balanced momentum. It means we're truly in a waiting game for Solana. It's not clearly trending up or down. Even short-term rallies are quickly met with selling pressure, indicating conviction is low at higher prices. But conversely, that 50-day SMA is acting as strong support, preventing deeper falls.
So it's trapped.
Trapped is a good word. A strong rebound off that 50-day SMA, which is around $162, would be a key signal. It could lead to a rise towards the 20-day SMA at $178, indicating buyers are starting to assert themselves. But until then, it's a very neutral wait-and-see environment.
When does the advantage definitively tilt towards the bulls for SOL? What level do they need to clear? And what are the critical downside levels we need to watch if the bears take charge instead?
Okay, the short-term advantage will undeniably shift to the bulls if the price rises decisively above $185.
$185, okay.
That level likely represents significant resistance, maybe a previous swing high or congestion area. If it's broken, it would signal a clear change in momentum and could potentially clear out short positions, maybe accelerating the move. A break above $185 would then open the doors for a retest of the crucial overhead resistance at $209.
And the downside?
On the downside, a break below $155 could see the pair slump down to $144 and then potentially to $137. That $155 level probably represents a strong support area. If it's breached, it would indicate a significant loss of bullish conviction and likely accelerate selling pressure. These downside targets are typically identified through, previous support zones or maybe Fibonacci levels, indicating where prices might find their next floor.
So it really presents a clear battleground for both sides.
Absolutely. The market is just waiting to see which side blinks first, which of these key levels breaks.
All right, let's talk about Dogecoin. DOGE buyers have managed to defend the 50-day SMA, but they're struggling fiercely at the $D.21 resistance level. Now, in the context of a meme coin where volatility can be absolutely extreme, what does the struggle actually signify? Is Dogecoin somehow maturing, or is it just stuck?
That struggle is really interesting because it suggests that even for meme coins, which, let's face it, are often driven purely by community sentiment and social media buzz, fundamental technical resistance levels still hold sway. The fact that buyers have defended the 50-day SMA around $0.19, establishing that base of support, but are consistently rejected at 21 cents, means there's a clear supply zone at that price. People are selling there. This implies that a certain segment of holders is looking to exit their positions around $0.21. Perhaps they bought lower, perhaps they anticipate further declines.
Taking profits or cutting losses.
Exactly. And the flattening moving averages and the RSI also reinforce this range-bound environment, which is a bit surprising for a traditionally volatile asset like DOGE. It suggests that while Dogecoin can have those explosive moves, it is currently respecting these established technical boundaries, maybe indicating a temporary cooling of that extreme speculative fervor. It seems caught between this volatile past and a more structured, range-bound present.
Okay, the report suggests range-bound action in the near term for Dogecoin. What are the clear boundaries of this potential range? And what happens if that crucial 50-day SMA support is truly broken?
Right, so if the price turns up and manages to break above 21 cents, it could climb towards the 20-day SMA, which is around $0.22. But sellers are expected to defend that level again.
So it's still capped.
Pretty much. This would essentially keep it trading within that tight corridor defined by these two moving averages and the $0.21 resistance. It implies any rallies will likely be short-lived, with selling pressure quickly emerging to cap significant upside. However, if the bulls fail to defend the 50-day SMA around 19 cents, which has been such a crucial support, that would signal a significant shift in the balance of power. A breakdown below this level could see DOGE descend first to 17 cents and then potentially down to the solid support mentioned at $0.14.
That's a bigger drop.
It is. That $1.14 level would represent more substantial decline, possibly a previous strong accumulation zone or a key psychological price point. It really highlights how critical these technical levels are, even for assets often seen as driven purely by sentiment. They still serve as critical battlegrounds.
Let's look at Cardano next. ADA bounced off its 50-day SMA, similar to others,
Mm-hmm.
but its relief rally is facing selling pressure at $0.76. How does this bounce and hit resistance pattern influence its immediate outlook? What does it tell us about the current sentiment for ADA?
Yeah, this pattern is incredibly common in consolidation phases like we're seeing across the board. The bounce off the 50-day SMA, which is around 68 cents, is definitely a positive sign for buyers. It confirms that this average is acting as dynamic support, preventing further downside, at least for now. However, immediately hitting resistance at $0.76 signals that sellers are still very active at those higher price points.
Ready to sell any pop?
Exactly. It suggests traders are using these rallies to exit positions, or maybe short sellers are initiating new bearish bets right there. It creates a clear ceiling for the price. It reinforces the idea that ADA is currently in a state of equilibrium, where neither bulls nor bears have a dominant hand. And again, the flattish moving averages and the RSI being below the midpoint further suggest continued range-bound action. The ADA-USDT pair is likely just swinging between these moving averages for the next few days.
So more chop expected.
For the immediate outlook, yeah, it means continued choppy, sideways trading until a clearer catalyst emerges to push it decisively in one direction or the other.
Okay, so what are the key levels that will dictate whether Cardano moves up or down significantly from this current tightly contested range?
All right, sellers will gain the upper hand decisively if they can sink the price below that 50-day SMA around 68 cents. If they manage to do that, the ADA price could potentially dive toward $0.56. That would be a significant bearish move, potentially invalidating recent gains and suggesting that the support which held has finally been breached.
Signaling weakness.
Definitely. Conversely, a strong rise above the 20-day SMA, which is around 79 cents, could push the price of Cardano up to $0.86. The 20-day SMA is that shorter-term indicator, remember. Reaching it with conviction would signal that short-term buying momentum is gaining strength, overcoming the current selling pressure. The $0.86 level would then become the next significant resistance target.
So again, it makes us wonder which side will eventually assert dominance.
Exactly. The market is just patiently waiting for a decisive move at one of these critical levels, $0.68 on the downside, $0.79 on the upside to signal its next significant trend.
Now we're looking at Hyperliquid, HYPE. And the report paints a somewhat different, more bearish picture here. It states its relief rally fizzled out near the 50-day SMA, and that sentiment has turned bearish.
Huh.
What specific technical indicators confirm this bearish shift? The report mentions a bearish crossover.
Right. The fizzling out of the rally and that consistent selling on any attempts to move higher clearly indicate a prevailing bearish sentiment. But what's particularly telling, as you mentioned, is the bearish crossover of moving averages.
What does that mean exactly?
This typically occurs when a shorter-term moving average, like the 20-day SMA, crosses below a longer-term one, maybe the 50-day SMA. It's a classic bearish signal. It suggests that the short-term price action is now fundamentally weaker than the longer-term average trend. Momentum has shifted down.
Okay.
Combine that with the relative strength index, the RSI, dipping into negative territory, meaning below 50, implying momentum is biased towards the downside and strong selling pressure. It strongly suggests bears are trying to seize firm control here, and the fact that the 50-day SMA acted as resistance, where that relief rally failed, further solidifies this bearish outlook. It indicates any buying interest that emerged was just quickly overwhelmed by sellers. The path of least resistance for HYPE looks downwards right now.
Okay, so if HYPE continues this slide and skids below $35.50, what's the next likely stop on the downside, according to the report? And what would it realistically take for buyers to even begin to suggest this corrective phase is over? It sounds like a tough road back.
It does sound like a tough road. A break below $35.50 could see the HYPUCT pair slump further down to $32. That $32 level likely represents the next significant support zone where some buying might emerge, but the overall momentum would remain firmly bearish.
So bounces might be weak?
Likely, yes. On any bounce to these lower levels, sellers are expected to fiercely defend the zone between the 50-day SMA and potentially the upper boundary of an existing downtrend channel, if one is formed. This implies any upward movement will probably be met with renewed selling pressure, making it incredibly difficult for buyers to sustain any kind of meaningful rally.
So what do buyers need to achieve?
They have to do something pretty significant. They'll have to push the HYPE price back into that channel specifically, above the channel's resistance line, to even begin to suggest that the corrective phase might be ending. That's a significant challenge, indicating very strong resistance for any meaningful recovery attempt. The bears seem firmly in control here for now.
Let's move to Stellar XLM. It also turned down from its 20-day SMA, again indicating that bears are selling on rallies. We're seeing a theme here. What does this consistent selling pressure at key resistance levels tell us about the short-term outlook for XLM? Does it suggest maybe a lack of new buying interest?
Yeah, that consistent behavior implies that while there might be some buying interest maybe at lower levels, the bears are firmly in control of the upward movements for Stellar right now. They are consistently using rallies, particularly as XLM approaches its 20-day SMA around $7.42, as opportunities to sell. It's predictable selling pressure.
Recapping the upside.
Exactly. It effectively caps any significant upside potential in the near term. It tells us the short-term outlook is bearish or maybe neutral at best, but with a clear downward bias. Any attempts by bulls to push the price higher are just quickly met with a wave of selling. It indicates a lack of conviction for higher prices among a significant portion of market participants.
Right.
It's a clear signal of bearish dominance in the short term, forcing XLM to either remain stagnant or continue a gradual decline. And yes, it does hint at a lack of fresh, strong buying power needed to overcome this persistent selling.
Now, the report states that for XLM, the next trending move is expected to begin on a break above the 20-day SMA or below the 50-day SMA. For our listeners trying to anticipate XLM's next big play, what does this actually mean? Are we just waiting for one of two doors to open here?
That's a perfect analogy, actually, yes. It means XLM is currently in a state of consolidation, very much like several other coins we've discussed, stuck between these crucial technical levels. The key thresholds to watch are the 20-day SMA around $0.42 on the upside and the 50-day SMA around $0.34 on the downside.
Those are the doors.
Those are the doors. A rally that decisively pushes and holds above the 20-day SMA would signal the correction is truly over and short-term bullish momentum is returning. It would invalidate the current bearish pressure from selling on rallies. Conversely, a clear slide and hold below the 50-day SMA could potentially sink the XLM price down towards $0.29.
Okay.
So yes, these two moving averages act as critical thresholds. A decisive breach of either one, ideally with significant volume to confirm it, would likely indicate the start of a new sustained trend. Until then, XLM is likely to remain in this choppy, sideways, or maybe slightly downward sloping range. It's absolutely a waiting game for traders looking for a clear directional bias, waiting for one of those doors to open.
Finally, let's round out our individual coin analysis with SUI, S-U-I. It is pulled back to its 50-day SMA, and the 20-day SMA is starting to turn down, with the RSI below 45. What do these combined signals tell us about the report's conclusion that bears have a slight edge for SUI?
Yeah, these combined signals paint a pretty clear picture of weakening momentum and that slight tilt towards the bears. When the 20-day SMA starts to physically turn down on the chart, that's a direct indication that the short-term trend is losing its upward momentum and is beginning to point downwards. That's a primary signal of weakening bullish sentiment.
The momentum is shifting.
Exactly. Then, the relative strength index, the RSI, being below the midpoint, and specifically below 45, further confirms that momentum is shifting in favor of the sellers. Remember, the RSI is a momentum oscillator. A reading below 50 generally indicates bearish momentum. Below 45 specifically suggests increasing selling pressure and a lack of sustained buying strength.
Okay.
These signals, particularly when combined with the pullback to the 50-day SMA, which is now being tested as support, strongly suggest that even if there are bounces, they are likely to be met with selling pressure. It genuinely indicates the bears are in a stronger position for the SUI-USDT pair, holding that slight but significant edge.
So, given these bearish pressures, what's the downside potential for SUI if they continue? And what would it take for buyers to decisively prevent further decline and maybe spark a reversal?
Okay, so if the price turns down from the 20-day SMA, which would then act as overhead resistance around $3.75, the possibility of a break below the 50-day SMA around $3.32 increases significantly. If that critical support level fails, the SUI-USDT pair could then potentially slump down to $2.87
Yeah.
and later perhaps to $2.65.
Okay, those are the next floors.
Those are the next potential support levels where some buying might emerge, but the overall trend would be decidedly bearish if we get there. Now, to prevent this downside and spark a reversal, buyers will have to do more than just hold ground at the 50-day. They will have to decisively drive the price above the 20-day SMA.
Not just touch it, but break through.
Exactly. Pushing and holding above it with conviction that would signal a clear shift in short-term momentum. If they manage to do that, SUI price could potentially initiate a relief rally, maybe towards $4, and eventually up to the overhead resistance noted at $4.30.
So it really highlights that ongoing battle at these critical technical junctures.
Absolutely. The 20-day and 50-day SMAs are indeed the decisive lines in the sand for SUI's immediate future.
Wow, what a journey through those 10 coins. We've navigated the intricate signals of the crypto market, dissecting everything from Bitcoin's pivotal range to the nuanced movements of all those altcoins. We did it armed with the insights from this comprehensive market analysis. So after all of that, what common threads or overarching narratives really emerge from this detailed dive? What's the big picture for you, the listener?
Yeah, if we connect all these dots, the predominant theme that really emerges is one of pervasive indecision and consolidation across many key assets, most notably Bitcoin. And this isn't just a technical pattern on a chart, it's a reflection of pretty extreme investor uncertainty right now. And historically, these periods often precede immense directional volatility.
The calm before the storm, maybe.
Could be. The market is truly coiled up, waiting for a definitive catalyst. While some altcoins, like Ether, show remarkable resilience, with bulls holding ground despite resistance, others are clearly battling strong overhead resistance or grappling with clearer bearish momentum, like we saw with Hyperliquid. The market really as a whole seems to be awaiting clearer macro triggers, perhaps a significant shift in interest rate policy or those sustained institutional inflows, particularly into crypto ETFs, to finally break these established patterns.
Right.
This period of widespread consolidation suggests a collective market breath holding, where participants are neither overwhelmingly bullish nor bearish. That leads to these tight, often frustrating trading ranges. It indicates the immediate future of the crypto market really hinges on external factors, or maybe just a definitive technical breakout from these established ranges, which will then likely dictate the path for the majority of the market.
Okay, so why should you care about these specific levels and technical indicators we've discussed? What's the practical relevance of knowing that Bitcoin is stuck between its SMAs, or that Ether's bulls are holding ground at a particular price point?
That raises a really important question, doesn't it? How can you actually apply this knowledge? Well, understanding these specific points of support and resistance and the underlying market sentiment they reflect allows you to anticipate potential turning points. It helps you recognize whether the market is likely to continue its current trend, maybe reverse course, or just stay trapped in a range.
Which helps you make better decisions.
Exactly. This is crucial for making informed decisions and, critically, for not feeling overwhelmed by the sheer volume of information and noise out there. When Bitcoin is stuck between its SMAs, for example, it tells you a large, decisive move is likely coming. You can prepare to react to a breakout in either direction, rather than being completely caught off guard. Knowing that Ether's bulls are holding ground despite hitting resistance informs you that underlying demand seems robust. It suggests the path of least resistance for Ether might still be upwards, even if it requires another attempt at that resistance.
It's like having a map.
It really is about understanding the language the market is speaking through its price action. These technical levels aren't arbitrary. They represent where significant buying or selling interest has historically emerged. Recognizing them provides a vital map for navigating crypto's inherent volatility and, hopefully, recognizing potential opportunities or risks. Yeah. Hashtag tag outro.
What a deep dive that was. We've navigated the really intricate signals of the crypto market today, from Bitcoin's pivotal range right through to the nuanced movements of various altcoins, all armed with insights from that comprehensive market analysis. Hopefully, you now have a clearer, more nuanced picture of that high-stakes tug-of-war playing out between the bulls and bears across the entire crypto landscape.
Yeah, and the insights from this deep dive really show that while the crypto market often appears chaotic, maybe driven by pure sentiment, it actually constantly communicates through its charts and price action, which makes
Mhm.
me wonder, how much does human emotion, fear and greed, continue to shape these technically defined movements, often leading to fairly predictable patterns, and what will be the ultimate, maybe unexpected trigger that finally resolves this pervasive period of indecision across the board?
A great question to ponder. Thank you for joining us on this deep dive. We really hope this exploration has given you plenty to mull over and perhaps even inspired you to look at market reports and charts with fresh, more insightful eyes. And hey, if you found this deep dive valuable, please consider engaging with the content subscribing, commenting, letting us know what you'd like us to dive into next.
Yeah, that interaction really helps.
It really does. Your support truly helps us boost visibility in the algorithm and lets us keep creating quality crypto content like this. Until next time, keep digging for those insights.